afternoon. So few sectors are as exposed to China as the dry bulk sector is exposed. Quick background: for the last several months, dry bulk day rates on Capes have stayed north of $20,000 a day. Earnings capacity, dividend capacity has been good, and these stocks continue to trade at mid-single-digit type valuations on an EV to EBITDA basis, which someday I hope matters in the shipping world. But as we get started, if I'll just turn it over to each one of you to introduce yourself and to give a brief update on your business.
So my name is Zafirakis. I'm the Co-CFO, Chief Strategy Officer of Diana Shipping Inc. Diana Shipping Inc. is a dry bulk company. We're listed in the New York Stock Exchange since 2005. I've been working for Diana the last 28 years, since I was 10 years old. And we are here to discuss the dry bulk sector. And I pass the floor to Loukas. Loukas.
Hello. You've heard Ioannis Zafirakis that he introduced himself. Now I will continue after him. And my name is Loukas Barmparis. I'm a president of Safe Bulkers. We are a company of 45 vessels in the dry bulk sector only, with 18 in total phase 3 new builds, out of which 12 have been delivered and the rest will be delivered until the beginning of 2027. And with a large renewal program, we have sold 16 vessels, and a large environmental upgrading program which improves the energy efficiency of our fleet, thus making our fleet more operationally efficient and creating further opportunities. Thank you.
Good afternoon. My name is Stamatis, Tsantanis. Thank you for having us here. I'm Chairman and CEO of Seanergy Maritime Holdings, US public company, pure play on the Capesize segment. We own and operate a fleet of 20 Capesizes, and also founder, Chairman and CEO of United Maritime Corporation, 5 ships there, Kamsarmax and Panamax. Combined cargo carrying capacity of the two companies, about 4.5 million deadweight tons, and looking forward to this discussion.
I'm Hamish Norton. I'm the president of Star Bulk Carriers Corp. We have 142 dry bulk vessels spanning the range from Supermax up to Newcastlemax. I should say, based on what's going on in the last few days, that we have no U.S. entity with more than 25%. And 2/3 of our fleet was built in China.
Hamish, take us through your last 48 hours.
Yeah, the last 48 hours have been interesting. We have a number of ships calling China, some built in China, some not built in China. And it's been exciting. We started ships running at 14 knots, which was as fast as they could go, on Saturday, in order to try to get into port yesterday, and we succeeded in many cases. There are some ships arriving today and some ships arriving tomorrow, and it's going to be very interesting. I think it will go fine.
Let's switch gears to China. So you read Wall Street research and China's doing badly, and you read China Beige Book and China's doing great. How do you guys see the current, not today, not the last 48 hours, how do you see the current situation in China, and how do you see it going forward?
Again, me first.
You first.
The Chinese story. Now, everybody knows that the real estate part of China is not doing as well as everybody wanted to do. The stimulus program regarding real estate it looks as if it doesn't work. However, iron ore, coal, and all the other commodities, they seem to be doing very well as we speak. The industrial the industrial part of China is doing as expected. And if we were to give you an idea, I would say that the situation in China is fair enough. It's fair. That's the only thing I would like to say. Loukas probably will have numbers, 5%, 6%, 7%. Let me hear.
Yes, I don't have numbers, but what I can say about China is that China is a very strong economy, substantially. I mean, we have not paid attention how strong it is, and I think we have not understood that how efficient this economy is. Right now, what we are facing, and this is something which is very important, is the retaliatory measures of Chinese to shipping, and this can cost several millions. I mean, if if a vessel is classified as of American interest, the cost is huge. I could say between 1 to 2 million per voyage. This is retaliatory against the USTR, which has passed already. So the idea is that we are getting a fragmented world as it goes on, with Chinese ships going to China, with non-Chinese ships coming to America. I think we are going towards a fragmented world, where each one of us has to find specific opportunities.
China has been importing more and more raw materials that are important for the global infrastructure growth. We're talking about, like Ioannis said before, 4 to 5% increase every year on iron ore, coal, bauxite. So the quantities actually going to China are tremendous. They have not really been hit by the real estate sector. They have found a way to make that steel. They produce 56% of the global steel production, which is one of the most important raw materials and products in order to do the infrastructure around the world. We're talking about trillions of dollars of infrastructure around the world, and you need to find the steel to do that. So that comes from China. We have not really seen them slowing down at all. They continue to build steel, aluminum, and all these products that are required for the world, and we have no reasons to believe that it's going to slow down anytime soon.
Yeah, and just to add to that, they've continued to import substantial amounts of coal. They're importing, similar amounts of iron ore that they've imported for a while. But the iron ore, for example, is, Brazil is producing more iron ore. Guinea, the Simandou mine in Guinea is supposed to start to ship in November and to increase its production through 2026. Even if the total tonnage of iron ore for steel making it does not increase, the ton miles should increase a lot, because Simandou in Guinea and the Brazilian mines are 3 times as far from China as the Australian iron ore mines. And if it's pretty clear that they'll take all the iron ore that's produced in Brazil and in Guinea. They may cut back a little bit in Australia, but that's still good for a huge increase in ton miles, which will predominantly go to the Capesize sector, which also has the smallest order book. So we're actually quite optimistic for 2026.
So coal, a year ago, Rystad came out with a bearish call, and about a year ago, IEA came out with a bearish call, which they more recently revised, so they're sort of neutral to positive, and so maybe coal demand isn't dead yet. This year's coal demand looks like it'll be similar to last year's. So have we seen peak coal demand? Do you think we're going to see peak coal demand soon? And and how does that affect how you think about what you're shipping, the day after tomorrow?
You know that China, they still have restrictions in the coal production. However, the winter seems to be cold, and it is expected that they will have, the imports will remain strong. The coal discussion is related to the environmental things that we keep discussing. However, the coal transported to China and from China, the numbers look to be very healthy, regardless. And you see, demand numbers, if you look at them as commodities, they're okay, they're fine. The question is whether we will have something going wrong in the GDPs of the world, around the world, in the chain of trade. Looking at China itself, it looks okay, and the coal, of course, in particular.
And you've got, go ahead.
Yes, I think that coal has plateaued somehow, and we don't expect a substantial increase. However, coal remains a key commodity for dry bulk, and in China, in Southeast Asia, in India, I think we will continue to transport large quantities there.
Well, yeah, the energy needs of the world, growing GDP rates in Southeast Asia of, 6, 7, 8%. We're talking about the vast quantities of energy that you need. And the only way that this energy can happen and can be fueled by is coal. Of course, you have natural gas and oil, but you have delivered 150 gigawatts of coal-fired power plants in Southeast Asia, and they're going to be, somehow need to run. So I don't really see coal getting anywhere. And India, with the growth rate and their reliance on coal, I don't really see any slowdown on coal anytime soon.
Yeah, and coal-fired electricity generation is there are coal plants being built faster than coal plants are being scrapped. So there's clearly an increase in demand for coal in China and countries around China. The question is how much gets imported versus how much is domestic production. And the coal production of China and the coal consumption of China is about 5 billion tons a year, more or less, and the imports are just a small sliver on top of the domestic production. So a little swing in domestic production can make a huge swing in imports, but I think on average imports, I believe, will increase, because I think domestic production is becoming less and less efficient in China as they exhaust their easy reserves, and it's somewhat dangerous the way it's done there. But it's sort of interesting to think about the scale of coal consumption in China. 1 billion tons of coal is like a cubic kilometer. And 5 cubic kilometers, just imagine that.
So I asked you about your last 48 hours. Stamatis, why don't you tell me about your last 48 hours?
Well, being in the U.S. and having all these arrivals in China as well in the next, not more in the next few days, but in the next few weeks, and trying to figure out what kind of regulatory environment we will be operating, what names and figures to put in the little boxes that all these arrival cards that we have received from the Chinese customs. That has made really our lives quite complicated, to say the least. And the fact that we are here, the offices in Greece, and we have the arrivals in China, and we have so many things going on, it's really a nightmare, to put it this way. I mean, it's one additional thing to add to the complexity of operating in international dry bulk industry today.
Yeah, and also waking up at Greek hours, which I'm sure you did today, I did today.
Yeah, that as well.
And Loukas, you spent some time dropping Chinese documents into AI for in English or Greek translation, whichever one it was, but tell us about your 48 hours.
I don't think that any shipping company in the world right now, especially if it's related with the United States somehow or to some degree, has not spent the last, since Friday, all day long to understand what there is exact meaning of the Chinese legislation and how it will be applied. Because basically this legislation came out on Friday just before market closing in Beijing. And so we had it over the weekend with implementation day to day in the morning. And without any kind of guidelines, there were several words that we cannot understand how the interpretation will be. Finally, as Hamish said, these documents came out today. We have them right now, and I think it's fairly easy to complete them and understand the situation. One of the important things is I want to point out the fragmentation of the shipping market, which makes more demanding the operation worldwide. Fleets will be reallocated based on their efficiency, especially after the results of the MEPC, which will come this Friday. So there will be reallocation based on the country of origin, based on the transportation, based on the operation, based on the energy efficiency. I think at the end of the day, all this will assist in the long run and will increase the profit margin. However, it's a nightmare right now.
If I may also add that while all these things are happening, the US government is closed. So imagine that. We have all these things happening in the world which are fundamental for the future of shipping, and not just the immediate future, but also the long-term prospects. And the US government is closed. So imagine that.
Yeah.
Imagine if Loukas pointed out earlier, if your passport was about to expire, imagine how much fun you'd be having right now.
Yeah.
Ioannis, how do you see the last 48 hours?
So I went for a dinner, and then, sorry, what do you mean? Then I slept, I woke up, no, I tell you.
Got a massage?
Oh yeah, a massage. So, no, I'll tell you a funny story with the form. Probably you have this problem yourself, guys. The form, there is in Chinese, and then there is the English translation, where it says, our entity is, brackets, not a US, blah, 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 blah. And then you have to reply yes or no. What do you do with the brackets? No, it's crazy. Shall we delete the brackets, the not, and say yes, or shall we delete is and say no? No, it's a complete mess. But I think we manage. We trial and error. We pay $3 to $4 million, and then we find out what's happening. But on a serious note, Diana Shipping, clearly we do not have an entity that owns, a US entity that owns more than 25%. Clearly we do not have a board that is comprised by 25% or controlled by US citizens, and therefore we are in a very good situation. We also have a lot of Chinese vessels that anyway they are exempted regardless, so it's okay. You want me to continue with the 48 hours?
If you feel compelled.
There is a Chinese restaurant. No, I tell you later, all right?
Yeah.
Thanks.
Good. I think we all understand what you ship into China, the iron ore, the coal, the bauxite, the grain. I think we all understand that. Help the audience, and we'll start with you, Hamish, help the audience understand what you ship into the U.S.
We don't ship much into the U.S., actually. The U.S. accounts for about 10% of dry bulk trade, but it's primarily exports of grain and coal. We sometimes would take cargo from the U.S. to China and come back with steel coils. To the extent that it will be expensive to come back to the U.S. in a Chinese-built ship with cargo, we may decide to take those steel coils elsewhere, to Europe or Canada or someplace near but not in the United States. But most of the trips do not involve taking steel coils back. That's a really good trip where we get paid in both directions.
I'm sure Canada would love to sell those steel coils to the U.S. for the right price as well.
Indeed. And of course, exports of grain from the U.S. to China have slowed down recently. So,
anyone else in terms of the cargoes that you bring into the U.S.? All right, let's get back to just old-fashioned supply, demand, fleet renewal, cost of fleet renewal, how the order book looks. Let's try to break this question up in a couple of pieces so you don't all answer the same question. But why don't we start with start here and talk about talk about just the dynamics around the order book and the cost of a new vessel and the availability of a second-hand vessel. Let's just start there.
All right. I have repeatedly said our opinion regarding numbers as regards supply and demand. The number by itself, if we talk about 6%, for example, order book for the Cape-size vessels, it doesn't mean a lot because you have to always put it relatively to something else. And you have to put that number relatively to demand, for example. If we are happy with what demand is going to be, the increase in the demand, and whether there is going to be an incremental positive or negative change. So we are familiar with the numbers. The order book in the dry bulk sector looks healthy, and one of the reasons is that the yards are occupied building other more expensive vessels. But this is not good enough to persuade anybody that the market is going to go up the next 2 years. We have to consider demand, we have to consider the sentiment, and what is happening in the world as regards geopolitics. Today we have routes that they have changed, that they can come back, that the ton-mile demand can decrease. Again, who really knows? I think we better play it safe. And I was reading lately, this is something that I have not said often, and there was a captain on a vessel, and a seaman was with him on the helm, and he was saying to him, the forecast says this, the forecast says the other, the weather is coming from there and everywhere, and the captain said to him, keep your eyes on the compass. So as Diana Shipping, we are keeping our eyes on the compass. We continue doing the things that we were doing the last 20 years. We do not deviate. If you start looking at the forecast, then probably you will lose your destination. Nice one, eh?
Nice one.
Thank
When
you.
you started talking about the captain on the ship, and I thought you were going to I thought the Pope was going to show up, and that was going to turn into a joke, but okay.
That was on a serious note.
Okay, excellent. And Loukas, give us a little more color in terms of this.
Look, as you all know, we are a traditional shipping company, and the main focus has been always to maintain a young and modern fleet. So basically, through this program that we have initiated in 2020 during the COVID period, we managed to have a nice order book and renewing the fleet with 18 new build vessels until 2027. The basic problem right now is that we cannot find slots in 2028, and this goes towards 2029. And so fundamentally, we cannot continue the renewing of our fleet. As a result, what we are doing is always we try to upgrade our existing fleet to maintain the operational efficiency and the fuel efficiency to increase the profit margin based on the fuel consumption that, let's say, after these investments we can have. The important thing is that all the yards right now in the Far East, and basically when we say Far East, we speak mainly of Chinese shipyards, are either building other types of ships, not dry bulk, or they are building dry bulk ships for Chinese interest companies because this is the effort to secure their supply routes when, if there are sanctions from the United States. So this gives a difficulty in further expanding order book, and I think this is also a good sign for the markets the following years.
But does it matter that they are built to Chinese? It's a part of the same pie, is it? It does.
It does.
And so, Loukas, does it matter whether the ships are built in Japan, Korea, or China in terms of the slot openings?
The question is, the response is that, of course, when they build, but generally they don't build too many dry bulk vessels. I mean, this is the main issue. And when they build it for themselves. So it's a very limited access of new build vessels in the dry bulk sector. And wherever they're building something, they're building for themselves. So shipping companies face some problem in renewal until 2029.
Let's talk about your planning a little bit around the fleet renewal decision-making process.
So what is different this time on the Capesize segment is the fact that not only you have the lowest order book of the last 20 years, but you have also a very aging fleet. The global fleet age average of the Capesize is now more than 15.5 years old. So by the time the IMO will be imposing all these nice little regulations, no matter where they will come from, the fleet average age will be 18, 19. And there is a strict cutoff point on the Capesizes, about 20 years or older, you lose about 50% of the available cargoes. So that's a very high risk factor. It can be a huge opportunity for companies like us that we operate on the Capesizes. But that's really a big problem because that's going to make the transportation cost quite more expensive and the fleet much older.
And Hamish, take us through your decision-making process.
Well, we think that, I think much as the other panelists do, that dry bulk new builds are too expensive right now, that the shipyards have a lot of business with container ships, with tankers. And dry bulk ships are not particularly profitable to build. They're very simple vessels relative to the container ships, for example. And there's less profit opportunity in a dry bulk ship. So you need the yards to be somewhat hungry for business in order to cut price to get dry bulk contracts. At the same time, Stamatis is quite correct that the fleet is aging. And, it's likely that there will be a period of time when the shipyards will be unable to keep up with the scrapping rates of dry bulk ships. Now, how do you have a shortage of ships and yet have ships scrapped? Because scrapping of ships only happens when people lose hope and there are no earnings. And the IMO could play a role there if they pass this climate change rulemaking. It may become very unprofitable to run older, more fuel-inefficient ships, and much more profitable to run newer, fuel-efficient ships. However, at the same time, this set of IMO rules will make it very tricky to figure out what kind of ship you want to order. because a fuel oil only ship, no matter how efficient, will attract penalties soon enough. Fuel oil plus LNG ship will attract penalties soon enough. In order to not attract penalties, you really need a ship that can burn zero or near zero carbon fuels. And of course, these fuels are not really available at the moment. So this is a conundrum that only time will solve.
Or an aggressive Greek manager. Let's get back to the question around ton miles. So we've talked a little bit about the replacement of Australian iron ore from Brazil, and so for the Cape side of the business, that's a good story. Let's drop down into the smaller vessels where maybe some of the other routes that have been Red Sea, that have gotten certain advantages during this period of non-peace. How do you see the ton-mile situation playing out for the smaller vessels? Why don't we start with you, Loukas, since...
Look, I believe that ton miles, one way or the other, will be increasing the following years. Of course, there will be always reasons such as Red Sea, even if Houthis stop any attacks, and this route will continue and will open again. I think that I give more important role on the global fragmentation. The fleets will be realigned with a reality which will be different of what we know. Until now, we didn't have barriers where to go. Gradually, barriers will be imposed, which, as I said before, barriers will be of various natures based on the construction, on the country of the construction of the vessel, based on the trading commodity, based on who is the operator, based on the energy efficiency of the vessel. For example, a vessel which is fuel efficient, or a vessel which can burn a compliant fuel, will be transferred right now to Europe, because there is where you have the maximum benefit. Depending on whether we have whether the GFS, the Global Fuel Standard, passes or not, we may have either a global situation or probably a more fragmented local situation, where there will be another regulation in China or another regulation in Europe, and this will be a nightmare. All these things will increase the ton miles and the relocation of the vessels. This is my personal belief.
All right, since we've only got time for, say, 1.5 more questions, I'm going to steal a Richard Diamond question or two. So you've all got about 1.5 minutes. What are we worried about today that we shouldn't be worried about? And what aren't we worried about today that we should be? I know.
But why?
You picked the wrong seat.
Yes, I know. Somebody put me here. Personally, I'm of the opinion that all of these things that they look as bad tariffs, or they look as IMO penalties and stuff like this, you have a lot of ship owners that they worry about these things. But my personal view is that from the moment something applies to everyone, the net effect is going to be the same, and the end cost is going to end up at the consumer. What I'm saying, in other words, is that instead of complaining about the new IMO regulation, about the tariffs, what is going to happen eventually is that the market forces will end up finding the equilibrium, and the market is going to end up where it should end up, based on demand and supply. So we should not worry, or we should not spend so much time trying to change IMO regulation, or fight for the tariffs and this and the other. And I think we should spend more time thinking how we can explore these challenges and make them opportunities. I think that for the companies, at least that they are here, being relatively better than most of our peers, competitors, gives us a very big competitive edge to do things, especially in the low market, where everybody else, most of the others, are going to have problems. So let's concentrate on how we can take advantage of these challenges rather than complaining about those.
And Loukas.
Yes, okay, I tend to agree with, which is not quite
First time.
obvious,
Wow.
maybe
Wow.
it's the first
Once in a row.
time. I tend to agree that we shouldn't be worried about the various changes which are coming, and they will come one way or the other. At the end of the day, shipping companies generally are quite flexible, and they can transform and adapt to any situation. One of the things that, let's say, that a shipping company should be worried more, I would say, is to find crews, which is a little bit difficult for everybody, and this will be a challenge for the following years. So to have a competent crews that would like to go on board and stay there 6-7 months, this is a big problem and a material problem for any shipping company. Otherwise, tax, tariffs, regulations, and whatever it is, I think we will be able to cope and to adapt and find the right opportunities, place the vessels in the right situation, in the right location, and try to make margin. Also, a good, let's say, a good point is that all this complexity, of course, will increase the profit margin of the shipping companies. So in the future, the costs of transportation will be higher. They will not be lower, and the shipping companies will become more profitable. For smaller companies, however, this could be a challenge because if you have, let's say, 5, 6, 10 vessels, you need quite substantial and trained people in order to operate in this new environment. So consolidation also will happen between in the shipping sector. Thank you.
Thank you.
Well, the last 5 years we've been operating through wars, pandemics, tariffs, whatever levies and port dues, you name it, and nobody has even, flinched. I mean, we have been operating very, very resiliently throughout all these adversities that, to have all that within a 5-year period, pandemics, wars, and all that, that's whatever obstacles you put in front of a shipping company, I think that we will be in a way and we will show the resilience to overcome that. If I may think of a risk factor for the future, that is not about the ship itself or, the seafarers, but we are seeing more and more the so-called AI models in the offices, and that could pose a threat for the personnel of the office of shipping companies because they have been becoming so advanced that within a period of, let's say, the next 5 years, we might see replacements of people. I'm sorry to say that, but these models work so good that we might be forced to, let them into our lives and make shipping better, but at the same time, there's going to be a cost to the human capital at the offices of the shipping companies.
And we're seeing that. And Hamish?
Yeah, so I think that something that shipping is going to have to worry about is very rapid technological change, which is, shipping has not been a particularly technology-sensitive industry in the past, and the technology has upgraded slowly and, moved from sail to diesel to, sail to coal, I guess, steam engines, diesel. But, I think zero or near zero carbon fuels are probably, I think, not the long-term future and may only have a brief period of applicability. If you use electricity to make hydrogen, use the hydrogen to make ammonia, use the ammonia to burn in an engine, you lose 80% of the energy that you started out with. And, if you put a nuclear reactor on board the ship, you need only 1/5 of the electricity that you would need to make the ammonia. And so my thinking is that this is going to, technological obsolescence of ships is going to happen much faster than we're used to, and that is going to be a very difficult issue for the businesses, for the shipping businesses, to avoid basically financial problems as a result of rapid technological change.
Thank you. And we're going to do a test later to test you on the math that Hamish just took us through. Gentlemen, thank you very
I
much.
thought there was going to be a question about our investment in Chenko. Ask me.
Go ahead.
No comment.
Good.
Thank you.